Yeah, crypto was doing well until October. So crypto was actually up like 36%. And then from October to the end of the year, it actually had, in some cases, like a 40% drawdown.
Yeah.
One was there was a big deleveraging. There was basically a pricing exploit that took place on one crypto exchange that led to what they call an automatic deleveraging. Then that cascaded across all the crypto exchange, and it was the biggest deleveraging event in the history of crypto, bigger than what happened with FTX after
So
FTX
what happened?
failed.
The people with leverage got unwound and they were forced out of longs, and it kind of wrecked the trend.
Correct, and it was a pricing error, but it liquidated over 2 million accounts globally. It wiped out, I think, a third of all market makers, which are important for they're the equivalent of central banks, and it crippled a lot of crypto exchanges. We just think 2026 will look like last year. Our base case is we are strong in the first part of the year, but then we have a drawdown that feels like a bear market.
Okay.
But we'll rally strongly, and I think at least a 10% gain.
Bitcoin is crashing hard right now, and no one seems to know when it will stop. The price has been sliding for months, and momentum keeps pushing lower. What looked like a dream rally after the election has turned into a nightmare for anyone who bought near the highs. Ethereum is down worse. Solana is hitting fresh lows. Even the stocks tied to crypto are getting destroyed. Coinbase is in a 50% drawdown, and the digital treasury companies that were supposed to lead the next wave are bleeding out fast. The timing feels wrong because everything was supposed to line up perfectly. A pro-crypto White House, friendly regulators, institutional adoption is finally happening. Fidelity launched a stablecoin. The SEC and CFTC just announced they want America to be the crypto capital of the world. Yet Bitcoin cannot catch a bid, and the mood is as dark as it has been since FTX collapsed. Popular crypto evangelist Tom Lee has been one of the loudest bulls in the market for years, and he was right when most people were wrong. Now he is making another bold call while everyone else is running for the exits. He says Bitcoin is not dead, and the real move has not even started yet. His argument is not based on hope, it is based on what he sees happening underneath. Let's hear directly from Tom Lee for more insights. Please don't forget to like, subscribe, and enable notifications. Thanks for tuning in. Enjoy the rest of the video.
We just think 2026 will look like last year. So our base case is we are strong in the first part of the year.
Okay.
But then we have a drawdown that feels like a bear market.
Okay.
But we'll rally strongly, and I think at least a 10% gain, maybe more now. Educated guess is that it can be a policy shock, like something coming from the White House, or the market testing the new Fed.
Okay.
Or both, but that is probably like last year then. So it's a market decline because people take risk off the table, but it's not really an economic downturn. So we end up recovering really. Let's say you're in your house, but the lights are off completely, but you're feeling your way around. And then so you feel like something fuzzy, and then you figure out it's your living room. Or if you hit your foot on a corner and then you're in the kitchen.
Right.
That's what I think trying to navigate markets are like, because we don't really know where we are at any moment, but then you try to find what gives you situational awareness. And we do that by doing a lot of cross-market analysis. So we take a lot of cues from volatility or what credit markets are doing or commodities, and that informs us of what the state of the equity market is. But a lot of our work also is trying to look at, with this current snapshot of all that, where does it place us? Does it put us back into 1950 or 70? Well, a couple things that are observable. One is earnings growth is picking up this year, not just in the U.S., but globally.
Yeah.
That's not usually late cycle.
Okay.
And market breadth has improved a lot.
Okay.
This year, someone said it's like a rolling risk appetite cycle, but a lot of things are going up that means the market's broadening. Actually, it's also broadening outside the U.S.
Yeah.
And then the third thing is there's arguably reasons to be optimistic incrementally, like whether it's AI or blockchain. I think especially coming out of Davos, when I didn't go to Davos, but I was following a lot of the reports and the panels. It's clear to me traditional financial institutions are starting to build on blockchain as a productivity driver. That's a big story in the U.S. especially.
Fidelity just announced their stablecoin. It's huge.
Yeah, That's right. And then today, the SEC and CFTC had a joint announcement. They want to make sure the U.S. is the crypto capital of the world.
Yeah.
And then there's onshoring happening kind of everywhere and defense. So there's things that are driving, like silver and gold are, like, if I was just an average investor, that trade has been working like every day and for weeks on end. So it makes sense. People are investing and they're astounding. And I talked to Tom DeMark today about that. He does think there's still room for that to extend.
He doesn't think it's exhausted yet.
No, he thinks gold can get to 8,900. It might be asset allocation because I had a brief conversation with Joyce Chang. Yeah, she was saying if you just do high net worth, 0.5% allocation incrementally into gold, now you're at 9,000. It's just small amounts of money moving into precious metals that could get us there. I mean, today's kind of a snapshot, right? Today, there was a big intraday decline in gold, and now it's like down 1%. And silver had a huge intraday decline, and it's like barely down. And then someone's telling me, I'm not a commodity expert, but now I'm like learning a lot on the fly. But like the physical market's even tighter. So the prices are actually higher in the physical than in these financial markets.
Okay.
And I'm going to quote Tom DeMark. He says this looks more like 79.80. So then it might be a topping process. I mean, someone pointed out, and I think it's correct that, and again, we're not really sure exactly why, but if someone said this is everything but the dollar, then maybe it makes sense.
Tom Lee explains that the crash we are seeing right now is not random. It is the result of a massive deleveraging event that happened in October. A pricing exploit on a crypto exchange triggered automatic liquidations across the entire market. Over 2 million accounts got wiped out globally. A third of all market makers were destroyed. These are the players who provide liquidity and keep the market running smoothly. Without them, the system breaks down and prices fall harder than they should. Lee says this was the biggest deleveraging event in crypto history, bigger than FTX, bigger than anything we have seen before. The damage was so severe that even strong companies like Coinbase took a hit. For the smaller exchanges with weaker balance sheets, the consequences were catastrophic. Their books got crushed, and they are still struggling to recover. But Lee also says this kind of event has a pattern. In 2022, after a similar deleveraging, it took 8 to 12 weeks for risk appetite to return. We are now at the edge of that window. He believes the worst of the selling is almost over. Lee still expects 2026 to deliver strong gains for the stock market overall, with a possible correction mid-year that will feel like a bear market but will recover quickly. The technical indicators he follows suggest that Ethereum might drop to 2,400, but that would be the bottom, not the beginning of another leg down. Let's watch more clips from Lee's interview.
Yeah, crypto was doing well until October. A few things happened in October.
Okay.
So crypto was actually up like 36%. And then from October to the end of the year, it actually had in some cases, like a 40% drawdown.
Yeah.
One was there was a big deleveraging. There was basically a pricing exploit that took place on one crypto exchange that led to what they call an automatic deleveraging. Then that cascaded across all the crypto exchange, and it was the biggest deleveraging event in the history of crypto, bigger than what happened with FTX after SB. It was a pricing error, but it liquidated over 2 million accounts globally. It wiped out, I think, a third of all market makers, which are important for they're the equivalent of central banks, and it crippled a lot of crypto exchanges. So their balance sheets took a huge hit. In 2022, it took about 8 to 12 weeks before risk appetite could recover. So we're like kind of in that outside window. In Bitcoin, I think there is a turning of the holders, because one of them is, Bitcoin's like 14 years old. So like the crypto punk, the 20-year-old is like becoming a mature person.
Right.
And many of them made fortunes.
Yeah.
So they've been selling their Bitcoin.
Okay.
And then, as you know, there's this quantum risk that is more Bitcoin specific, because quantum developments are accelerating.
Yes.
And about a third of Bitcoin wallets are not upgradable. So they're actually quantum vulnerable. Quantum operates more like an ASIC, like a brute force of a repetitive calculation. So it can break encryption. So Bitcoin's encryption is what can be broken. you're right. So you can break a lot of encryption, but banks hopefully would be upgrading all their customer passwords, force you to do a new type of password. And that's how you avoid quantum vulnerability. The thing is, like a lot of Bitcoin wallets like Satoshi's haven't ever been upgraded. So actually from a technical perspective, this is what Tom DeMark actually is expected. So he's been hired as an advisor at BitMine, and he actually told us Thursday was an important day. And it turns out today was an important day because we've had a big decline in crypto. But this is more akin to the end of the selling, not the beginning.
So you don't think that we're seeing another leg lower?
Well, for instance, Ethereum might go to 2,400, but it's a touch, and then that's the bottom. But that's going to coincide with precious metals peaking. I mean, remember, precious metals has sucked all the risk appetite out of speculation, out of crypto, right? A lot of it's come out of crypto into precious metals. But there is a really big story around blockchains, which is Wall Street dismissed blockchain and crypto as like just experiments. But now financial institutions are rebuilding settlement layers using blockchains. That's what Standard Chartered said at Davos. The UBS CEO says that in a few years, there's a convergence between digital assets and traditional finance because blockchains offer finality and a lot more security. And Larry Fink says he thinks that the entire financial system is going to operate on one common blockchain.
But why is that good for Bitcoin?
Well, it's probably good for Ethereum. That's really where stablecoins have been built. You do smart contracts so you can lock information and prevent it from actually being altered. You could put a 1,000,000-page legal document on the Ethereum blockchain. If someone tries to change a period on that blockchain, the hash fails.
Right.
So that's how you protect information.
Right.
It's 100% uptime. This is what Wall Street, as they think about the narrative around the future, is they're building their entire system on contracts like Ethereum, which is really bullish for Ethereum.
What is it?
Okay, so if we talk about stable coins, Tether has about 160 billion of US dollars tokenized on Tether is a company.
Yes.
But it's mostly running on Ethereum. Even though it's only 168 billion, which is less than 1% of M1, so it's not even like risk assets, it's not credit equity tokenization. Right. They're going to make $20 billion this year. Actually, because of their balance sheet, they might be making like $24 billion.
And that's just the interest on the treasuries that they own to back the dollar value of the coin.
And because they're over collateralized, they actually own like now almost $30 billion worth of gold or something.
Oh, wow.
Right.
Okay.
But so let's say they make 20 billion, not 24, but somewhere between 20 and 24. They're a top 5 most profitable bank in the world.
Wow.
It's amazing.
They make more money than Goldman or Morgan Stanley.
That's amazing.
And that's just a monoline product with 300 employees. So let's say the Wall Street tries to do their own blockchain because they want to control the narrative. Then there's going to be a new JP Morgan that is like Tether that'll be built on the public chains. Because Tether's built on public chains. And It's better than, JP Morgan has 300,000 employees. Tether has 300. And they make almost as much money as JP Morgan.
It's crazy.
Tom Lee is not just looking at short-term pain. He is looking at what happens after the dust settles, and his view is surprisingly optimistic. He points to a massive shift happening in traditional finance that most people are not paying attention to. Wall Street is rebuilding its settlement systems on blockchain technology. This is not a small experiment. This is the foundation of the entire financial system being rewritten. Lee explains that stablecoins are the proof of concept. Tether alone has tokenized $160 billion and is generating over $20 billion in annual interest from the treasuries it holds. That makes it one of the most profitable banks in the world, with only 300 employees. JP Morgan has 300,000 employees and makes roughly the same profit. That gap will not be ignored. Every major financial institution is now racing to build its own stablecoin because the economics are too good to pass up. But the bigger story is Ethereum. Lee believes Ethereum will be the blockchain Wall Street builds on because it has a track record and infrastructure. Smart contracts lock information in a way that cannot be altered. A 1,000,000-page legal document can be stored on the Ethereum blockchain, and if anyone tries to change even a single period, the system rejects it. That level of security is what financial institutions need. Ethereum has 100% uptime and upgrades twice a year to stay ahead of threats like quantum computing. Lee says this is why Ethereum is different from Bitcoin in terms of utility. He also addresses the argument that stablecoins are stealing Bitcoin's use case. Some people say, if you can hold $1 on the blockchain that earns interest, then why hold Bitcoin at all? Lee does not see it that way. He sees stablecoins as the gateway. They bring people into the blockchain world, and once there, they start to see the value of holding something scarce and decentralized, like Bitcoin or Ethereum. Lee admits the current price action is brutal. Gold and silver are sucking all the risk appetite out of the market. Traders who were in crypto have moved to precious metals because that is what is working right now. But he says this is temporary. When precious metals peak, crypto will bottom, and the next wave will begin. He is positioning for that move, and he believes the market will look very different by the end of the year. The question is whether you believe the damage is done, or whether this is just the reset before the real rally starts. What do you think happens next? Please leave your thoughts in the comments below. Thanks for watching. Don't forget to like and subscribe.